This is MacroVoices, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Now let's get to that chart deck. Listeners, you're going to find a download link for the Postgame chart deck in your Research Roundup email. If you don't have a Research Roundup email, it means you have not yet registered at MacroVoices.com. Just go to the homepage, MacroVoices.com, and click on the red button over Adam's picture saying, looking for the downloads. Now, Eric, let's cover crude oil starting with the EIA inventory data.
EIA printed a drawdown of 2.5 million barrels, Cushing, Oklahoma drawing down 341,000 barrels, gasoline drawing down 235,000 barrels, distillates drawing down 45,000 barrels, for a net petroleum products drawdown of 2.7 million barrels. U.S. production held steady at 13.1 million barrels. The continuing market weakness is no great surprise given geopolitics settling down at least a little bit and plenty of spare capacity in OPEC. I wouldn't be surprised if the market continues to drift lower until we get some kind of upset in the geopolitical front, and I'm sure that's happening. It's just a question of when.
Yeah, so Eric, it's been well over a month now that this oil correction's getting underway, including several weeks trading below the 50-day moving average. And there's certainly a large number of traders quietly abandoning the long oil trade. But I'm not in that camp. I think that this type of a consolidation was long overdue. And this is actually a tactical place to be watching whether or not the bulls can hold the line. Now, obviously, it's not going to be confirmed until we see, legit break it back into the 80s. But I'm watching here to see whether the selling is going to subside here and whether the bulls give it a shot at some point from this very oversold state. Now, let's move on to equities. I want to get Nick involved in this conversation. Now, Nick, the S&P 500 and Nasdaq broke to fresh highs here. Let's start off just with their levels. What are you watching here?
Yeah, Patrick. So right now, spot price on SPX is approximately 5,300. We have an implied move for the June 21st monthly OPEX of plus minus 130 points. Therefore, the upper implied move is 5,430 and the lower implied move is 5,170. Right now, we have no key resistance as we're at all-time highs, and key support is about 50 points below at 5,250. I'm inclined to think we see perhaps a bit more of a run to the upside toward that 5,350, 5,400 area before a pause. And that's my stance for the next few weeks or so.
Well, interesting thing to me is this the beginning of a new bull run, which even a bull run would measure even to 5,600, or is this a bigger part of a topping formation, which is, the head of a head and shoulders pattern will always break to a slightly higher high. The levels where if it was going to be a topping formation should fail below 5,400 and at some point give something back. I'm more on the camp that this is going to be where there's going to be a lot of resistance, even though the bull run in the last few weeks felt so good and there's been so much momentum. I think that this market rally meeting resistance up along here is most probable. But the bigger question is that even if it does meet that resistance, doesn't mean anything bearish. I mean, we could stay bouncing around in ranges for the entire summer. That doesn't make it bearish, in my opinion. It's just about whether there is that big upside or not. Anyway, what levels are you watching on the Nasdaq?
So right now on the Qs, spot price is approximately 453. We have an implied move for the June 21st monthly OPEX of plus minus 13 points. Therefore, our upper implied move is 466 and our lower implied move is 440. Right now, we have no key resistance as we're at all-time highs, and key support is just below at previous all-time highs at 445. As we're seeing a lot of the mega cap names hit all-time highs, I'm inclined to think we see perhaps a pause around this area, as you mentioned. And again, we could say range bound for a few months. There's nothing to really denote that we should see a huge correction pullback. I do think that we see some kind of pullback before the election, however, in the area of around 5 to 10%, but when that takes place remains to be seen.
It's interesting when we go look at the VIX on page 6. One of the things that was driving this short-term impulse is a lot of those trend-following systems and or vol targeting funds were obviously unloading a little bit during the correction. And very quickly, as we see the VIX come right back down to the very bottom of its year range, there's certainly some buy impulsing coming in from all of these tailwinds. Now, the question is, with volatility down along these lows, is all of that buying impulse been played out? Nonetheless, so what are you watching here on the VIX?
So right now with the VIX at about 13 handle, we can expect to see roughly 0.75 top to bottom moves on SPX intraday. We're not seeing a lot of demand for hedging right now, as we're seeing a lot of bids on the mega cap names to the upside. The one factor that I'm watching though, however, is the meme stock mania. We've seen, GameStop, AMC, and a few other names pop in recent weeks. And that could cause perhaps some forced selling in the big names if we do see short squeezes to the upside in names like GameStop, for example, as hedge funds get liquidated and forced to sell their main positions in order to cover their margin requirements. So that is a possibility. However, right now, no one's really buying insurance anticipation of that. So anyways, moving on to page 7, we have the US dollar index. What are you guys thinking here?
Well, we rejected 106 pretty firmly and are already back down to 104, which has been a key technical level. So we should either expect to find support here at 104, or if it doesn't hold, the move to the downside should accelerate.
Well, this pullback in the U.S. dollar is interesting because since the March breakout, the U.S. dollar has stayed sustainably above its 50-day moving average and bull trend. This drop in the post-CPI number is the first breakdown below the 50-day moving average we've seen. Now, that in itself does not signify that a new downtrend is underway, but this is actually a very important moment because the bulls pretty much have to recover this in a very short order of time and get this back into a bull trend for that to be the most immediate move. If we see that the US dollar selling persists here on the short term, that actually leaves the window open for pulling back towards the March low around 103, and that would create a big currency muddle for the summer. So right here, will the bulls be able to turn it is what's on my mind.
Moving on to page 8, we have that gold futures chart. What are you guys thinking here?
It looks like the correction is probably behind us now, with June futures breaking above 2,400 round number resistance late on Wednesday afternoon. If this continues, it looks to me like the correction is behind us. We're probably headed toward, I'm going to say 27.25 before Labor Day, as a question of whether the next leg takes us that far, or if we get maybe 2,500 next, and then another correction. I guess we'll have to see what the summer brings us. But I think this gold bull market is very healthy and set to continue.
Well, what's interesting to me, Eric, is that gold, while it hasn't broken that April high just yet, silver has. And so precious metals continue to actually get a lot of flows. And that's certainly got down the tailwind of a little bit of a weaker dollar, and gold continues to plug along. Now, overall, the price action has been very bullish in these precious metals, all dips being bought and no real follow through on any selling pressure, well above all of its primary trends. And so right now, gold continues to plug along and looking for that to continue. But what I wanted to also mention was on page 9, we have the copper chart, and copper has actually gone outright parabolic. I mean, we now are seeing accelerated moves to the upside. But what's interesting here is that we've now approached its multi-year highs, the 2021 and 22 highs, with this momentum. And typically you would see that at least initially, this is a place where some selling often will occur just to check the rise. But will the bulls and this momentum be able to cut through these previous highs like a hot knife through butter? If it is, that could really open up the move for an acceleration. My first inclination always is that the rally finds this resistance and gets checked here. But what a really important moment here in copper.
And moving on to page 10, Eric, we have that chart of uranium. I'm always interested in hearing your thoughts.
President Biden signed the Russian-enriched uranium import ban into law this week. It takes effect in 90 days' time. The sector had turned around and was marching higher in anticipation of this bill passing. But now that the ink is dry, it appears that we're having a little bit of buy the rumor, sell the news. It's all noise, though. In the bigger picture, we're in a structural uranium bull market, and it's set to continue higher.
Yeah, well, interesting, Eric, that the spot price of uranium really never started to take off on the upside, while many uranium stocks and even the Sprott Physical even temporarily traded at a premium to its net asset value as money was started flowing in there, and it just hasn't been confirmed. I still generally feel that this is a very bullish chart, and a lot of price action continues to work in its favor. The big question is, when do spot prices of uranium really start to confirm this? Right now, it's while it's a bullish chart, there are a lot of other commodity spaces that are getting a lot more love right now. Be interesting to see whether uranium really joins the party here. Last thing I wanted to touch on, though, was page 11. I wanted to start keeping an eye on all the grains. In this case, I'm just going back to wheat. But whether it's wheat, corn, and even quietly the soybean, you're seeing that the grain markets are basing and slowly starting to turn. You're even seeing basing formations on a lot of those agricultural names that have been left for dead. And so it'll be really interesting to see whether or not we're seeing a bottoming formation forming on a lot of these grains moving forward.
Folks, if you enjoy Patrick's chart decks, you can get them every single day of the week with a free trial of Big Picture Trading. The details are on the last pages of the slide deck, or just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.